All right, so hike, modest or not, why is that moving prices higher when just last week we saw oil move lower on oversupply concerns?
So, Frank, last week there was a rumor going around markets that OPEC was considering fast forwarding the return of 1.6 million barrels a day over the course of the following 3 months. So people are looking at potentially 500,000 barrels a day increase now and this over the weekend, another 500,000 in a month, another 500,000 month from now. So I think that those fears were misplaced, and the market is rebounding because the announced increase is more modest than I think people initially feared a few days ago.
All right. Why are there so many concerns about oversupply? If I'm looking at the Atlanta Fed GDP Now tracker, it's at 3.8% for the quarter. Very strong growth for the quarter. Over in China, we're also seeing it kind of seems like an AI renaissance, and that seems to be also what's powering the markets here in the U.S. and the economy here in the U.S. If you listen to Jay Powell and other people, why are we so concerned about oversupply?
Well, Frank, part of the issue with oil is that there is a lot of volume coming in from places like Guyana. You have volumes coming in Guyana, Brazil, Canada. So you have a fair amount of non-OPEC supply over the coming 9 months or so. And then OPEC has decided to really ramp up to 4 million barrels a day of capacity. Now, remember, not all the barrels that OPEC has announced will materialize. For the time being, we've seen about 70%, 75% of the initial uplift announced in April, or that started in April, coming to market. And now we'll see how much of the second leg of the 1.6 million barrels a day that were announced last month will eventually make its way through. But there is a surplus, right? And the surplus is occurring in China in strategic storage. So I think there's concerns, value concerns. We are bearish. We've been bearish for a while, as you know. We think we'll probably get down to $60, $61 a barrel on average for the quarter. But we don't really see any catastrophic scenarios here coming into next year for the reasons you alluded. We think demand is actually going to be pretty healthy.
All right. I want to get to your forecast when it comes to non-OPEC supply. So it's about 1.2 million barrels per day this year. But next year, you see that drop into 500,000. What does that mean for the oil market going into 2026?
So this is the most interesting part, right? We are going to see an inventory build. We're seeing one, right, really in China. It's going to continue, like I said, throughout the winter. Then we'll see how cold the winter is, Frank, because remember, temperatures do matter for oil and natural gas demand. And eventually, we coming to the second half of 26 in a much firmer footing. We believe the majority of the surplus will be stored by China over the coming 6-9 months. And then as we come into the second half of 26 and 27, the market will be much more balanced, and prices will likely end up averaging $70+ a barrel. Again, second half of 26 into 27.